Hello guys, yeah, welcome again. So I'm gonna touch on derive mt5 binary.com. So I'm just gonna show you what really is happening on the charts and what you should be looking at. So I'm gonna load my template. So I'm gonna teach you like two strategies, but for now let me teach you the first one. Okay. Now, as you can see, this is one of the templates I'm using. What do we have here? We have the RSI. We have 10 and 90. 10 is oversold, 90 is overbought. But you must always know that price can reach 10 and still continue to move down. The RSI doesn't measure the lowest point of the price. Zooming out fully helps for you to understand. You see, what is it showing? It's showing that there's still a lot of room for it to go down. But if you are zoomed in, right, on the normal zoom, you might think this was the lowest point. So you might think, no, this market is moving up. But this is just possibly a pullback in the downtrend. So the market will continue going down. Why? Zoom out. When you zoom out, you're able to see what? That no, this market has a long way to go down. It hasn't even reached the 50% level. It hasn't reached. So you must understand that. So now, like I told you, since there's no indicator out there which can measure the lowest point or the highest point of price, since support and resistance does not always hold itself, sometimes the price can come and it can break the resistance. Sometimes the price can come and it can what? Break the support. Right? What is this showing? It is showing one thing that I've been talking about. Look at this. In trading, there is what? Profit and there is loss. Right? When you're trading manually, there is profit and there is what? There is loss. For you to be consistent in trading, it means you have to make more profit than what? Than you lose. So that shows what? It shows that there's always profit and loss, but you have to make more profit than you lose, right? Even the indicators, they are not 100%, right? Even the chart, when it moves in waves. It doesn't just go down straight, right? It's like they tell you for you to move from South Africa to America, you have to pass through a certain country. And then you tell yourself that, no, I'll get to America without passing through that country. It's impossible. No matter how many years you tell yourself that, no, me, I'm going to do it. I'm going to make it. I'm going to get to America from South Africa without passing through that certain country. It will never work. It's like insanity, right? You are doing the same thing every single day, guys, but you are expecting different results. It doesn't work, guys. It doesn't work. You cannot do the same thing every day and expect different results when you're not changing. It cannot work. So what I'm trying to say is that uh, resistance or support is not all the times that it is respected. It can be broken. The support and resistance can be violated. It can be broken. So it's also not the leading indicator. The leading indicator is price, right? Either you're using volume or you're using the candlesticks, the Aikinashi candle. I like using Aikinashi candles because they are more smoother than the normal candlesticks that you are used to. So the Aikinashi, it comes with the MT5. It's an inbuilt indicator. I'm gonna send you this one, the plombias, the one with the upper band and the lower band and the center line, this middle line. And I'm gonna send you the support and resistance indicator. I think some of you have it, the one which writes verified resistance and tested resistance. It just shows you the support and resistance levels on the chart, right? The untested ones are the ones whereby price hasn't tested, right? These are the untested support and resistance, right? So now those are the indicators. You can see I also have the belly resistance and support here, right? We have the belly resistance and support. Down here we have also some more support levels. You can shrink the chart. These are verified support levels. That's why I was telling you that this price is in a pullback. The long-term trend is that this price has to come down here again. As you can see, it's still in motion to go down. So now what you must understand is that since the leading indicator of price is not the indicators themselves, the RSI, the support and the resistance, all these indicators you see here, they are not what? They are not the leading indicator of price. So now, if all these things, as you can see, all these indicators, they are external, right? Let me tell you the secret. All these indicators, they are external. They are indicators which were programmed what? By different people, right? And these indicators, they are trying to predict the motion of the market. These indicators, they are trying to help you to understand how the market is going to move, right? They are trying, right? So now, tell me, what is more powerful? The human mind, the power of observation of the charts, or the power of using indicators? The most powerful thing is the power of observation of how price moves. Because all these indicators, they are not more powerful than your brain. They are not more powerful than your mind, people. So you have to know that the most powerful indicator above all these, because these ones, they're just making you to understand the level of price, or to know that, okay, price is in this state, right? If they were not there, it might look like a difficult thing for you to what to understand what's happening. Because if we didn't have this support and resistance indicator, it means you have to draw your support and resistance. You have to draw them manually, right? And yes, support and resistance is very important. Apart from all these other indicators you see, the moving averages and the RSI, the most powerful indicator among all the indicators you can ever find for predicting the turning point of price is always support and resistance. But like I said, support and resistance can be broken. Therefore, it is not the best. It is not the leading indicator. Where can you find the leading indicator? As I was explaining to you, the leading indicator, you can only find it on the price. So now, how can you be able to trade the price and be profitable? You can only trade the price by understanding how it moves. And how does the price move? The price moves using what? Patterns. People, the price always make patterns. So now, what are the patterns that the price makes, right? There are many, many patterns that the price makes, right? I'm going to look at only two patterns. Only two patterns to trade the price, right? There are different patterns, but the most powerful one is the first one that I'll be telling you about. The second one is the one that you trade whenever, let's say, the trend has already started, or the downtrend has already started, but you want to know, where can I enter the downtrend, right? Where can I join the downtrend so that I can what? So that I can benefit. That will be the second one. But the first one is the most powerful, and it's very, very effective on the volatilities. It always works. This pattern happens on the 1 hour, and it also happens on the 30-minute time frame, right? So whenever it happens on the 1 hour or 30-minute, it's a very powerful pattern that can make you money, right? So the thing about these people is that human beings, we are not disciplined, number one. We are emotional, right? Even if you are taught that this is what you should follow, human beings will always have a tendency of what? Going away from the rules, right? Sometimes when you see that there's no trade in the market, you want to force the trade. That's the problem. That's why we end up always losing money, because we want to force the trade, right? People, never bring your personal problems in trading. You will lose. Don't say, I want to pay for my debts. I want to do this. I want to do that. Don't be under pressure when you're trading, because if you're under pressure, you spend the next 2 years of your life still blowing accounts, right? You have to learn to change, guys, right? Do you know what can take you 6 months? Can actually, for some people, what can take 6 months has taken some people 4 years, just for them to realize that they've been doing the same thing over and over again, and they don't want to change, right? That's why I know some people's characters are different in this group. I know some people who always listen to the rules and they will be successful. And I know some people who always have that quality in them whereby they are still trading under pressure. They still want to sort out all their problems at once. It never works. You find yourself in more debts. You find yourself in more problems, right? Because you always lose money being in a rush to make the money. But someone who can be patient enough and forget all their problems of life and say, you know what, I'm going to take this $20, I'm going to take this $15, and I'm going to be patient. I'm going to follow exactly what I'm being taught. And I will never trade anything that is apart from what I'm being taught. And guys, whatever I showed you, whatever I'm going to show you today here, if anyone trades whatever I'm going to show you and then post a trade and they tell me that they lost money, I'm gonna laugh at you, honestly. Losses will be there. I'm not saying losses won't be there. Losses are part of trading, right? But you won't lose in most cases. But if you took the instructions exactly the way I'm giving them, and then you say you lost, always send me a screenshot of the trade that you took, and let us see if it's matching whatever I'm teaching you here. You understand? So now the price moves using patterns, right? So the pattern that I'm going to teach you, and it's very powerful, it's the M and W, the M and W formation. So every time you're trading volatilities, guys, right, you look on the 1 hour and then you look on the 30 minutes for these patterns, right? You look on the 1 hour and then you look for on the 30 minutes. Even sometimes on the 4 hour. If the pattern is happening on the 4 hour, what does it mean? It means it's going to be a long move. If the pattern is happening on the 1 hour chart, it means it's a trade that you can hold for 1 to 2 days. If the pattern is happening on the maybe 30-minute time frame, it means it's a trade that you can hold for that day, particularly that day, that no, I'll be holding it just for this day. You understand? So we're going to start with a more recent pattern that happened, right? Today is the 8th. Yesterday was the 7th. On the 6th, there was a pattern. There was a pattern, right? Price came up into this belly area, this resistance, the maroon area here, right? Price came inside there. Although it did not complete to go to the 100% or what, it came inside, right? So this area is an area where we look for selling opportunities, right? It hadn't created any untested resistance at that time. It just came inside, right? So when the price came inside, the price started to drop, right? It dropped for 1, 2, 3, 4, 5 hours. After dropping for 5 hours, right? It went back to what? To retest. It went back to retest. It went back to retest. So when it went back to retest, what were we waiting for? We were waiting for it to come back and cross the, what's this? The 13-period moving average, right? So where could you have entered the trade? You could have entered it here when this candle breaks below here, right? So now what are you seeing here? We are seeing price going up, coming down, going up to retest and fails to break this area. This is an M, guys. Let me show you something. You see this area? Let's go. Price went in this area, failed to break, came down like for 1, 2, 3, 4, 5, 6. You're not trading. You know what? The mistake you make, you people, is when you're trading reversals, when price shows that it's reversing, you enter, and then when the price moves a bit, it comes back and takes you out. And that's how the market makers work, right? Because you are in a rush to trade on the first trade. That's like guessing, people. You have to allow the market to show you where it is going. The market is like a map. The market is not like a car. You cannot control the market, people. It has to show you the way. It's like a map. You have to follow it. So for you to follow the market, you have to know the patterns that happen in the market. So here we have determined what? We have determined that price came into what? The resistance of the belly system, right? And price was where? Was close to what? The upper band of the plumb bias, right? So what are we looking at here? We're saying, okay, price is now going into the overbought region. If it continued moving up, we couldn't have been doing anything. We could have been waiting for the pattern, right? We could have known that, no, it's going into the what? The overbought region. But if it forms a pattern in this region, we are going to take the trade. So the pattern formed early. It came down already, right? The moment it was going up, you could have been preparing to say, if it rejects and comes back, pulls again, if it rejects and shifts direction, you could have been preparing to sell it. Because if this was going to continue to be an uptrend, guys, it could have gone like up, like you see here. It could have gone up, come down, and it could have gone beyond. You understand? It could have gone beyond, right? If it was to continue going up, like if it came down like this, it could have broken this place and gone beyond. That is a trend, right? A trend is full of what? Pullbacks. So if it's going up, it will pull back, it will go up, it will pull back, go beyond, forming a higher high, and pull back, then go beyond, right? But if price now rejects and goes down and goes back up and fails to continue its uptrend, then shifts from that zone, it creates what we call an M formation. This is an M. If you see, it goes down, goes back, rejects, comes back, and shifts and closes below the moving average. This is an M. This is where you sell. And this is a trade that you can hold for what? For 2 days, because it's from the 1 hour chart. How many days is this? 1, 2, right? Today it started what? Changing. So you could have been out maybe when you got the signal, the bullish engulfing from the belly system. You could have closed your trading profit, right? Now, let's go back a bit. Remember, the M's and the W's I'm showing you is what? If it's an M, the price must move down for at least even 4 hours. You understand? Price must move down for at least 4 hours. If it's a W, we take it from what? From the bottom. So you see price has been moving up. It formed a weak support here, right? And it bounced on the lower line here, right? And you can see there was a distance between the lower line and the center line, which is the center of gravity. So automatically we know that, okay, prices will be attracted to the upside because it's there's a distance, there's space between what? The lower line and what? And the center line. So what we know is that, okay, price has the potential of moving up. But We cannot trade price on the first change of direction. That's the mistake we make, guys, because you would see one white candle or one candle on the candlesticks which is showing the bullish momentum, one or two, and then you buy immediately. Sometimes price can just turn against you. It can do 1, 2, 3 candles and then turn against you, then continue with a downtrend, which means it will just be a pullback and a continuation. Because if we can look down, I can zoom out, you can see there's a lot of space. This thing has a long way to come into the support of the belly system and into also these support zones of this support and resistance indicator. It has a long way to go, like I was saying, right? So automatically, for you to determine that this thing is going to move up from the first 10 up, it's very wrong, because the downtrend is still intact. So how can you be sure that it's going to move up? It's when it comes back to retest this area. If it comes back to retest and fails to break this area, then shifts the zone and crosses this 13 period moving average, you know that here I'm buying, right? So for example, here where we had an M, so if we bought here, where do we put our, you can say, stop loss, right? Where do you put our stop loss? Usually with me, guys, the way I trade, I don't trade with a stop loss. Why? Because I've got a different approach. I'll show you what I mean. But normally those who are trading with a stop loss, you put it on the previous swing high, not the highest, but maybe somewhere here, right? Which means if you are risking a $20 at this distance, right? How much can you earn in this 2 days, right? So let's calculate. Let's say you came out here, right? And from here to here, you are risking, saying, if it goes against me from my entry, if it goes against me to this level, I'm gonna lose what, $20. So let's calculate how much it could have made. Okay. Okay, there's a calculator, guys. So what I'm trying to say here is that how many pips is this from here to here? What's that number? 78370 points. 78,370 points. 78,000, 78,300 and, is it 30 points? Let's check it again. Let's check it again. Okay, let's just say 79,325. 79,325. 79,325, right? And then what's the distance between your entry and the stop loss for those who trade with stop loss? But I'm gonna show you how I trade myself. This is what this is 12,903. So 12,903 points is minus $20 of your money, right? It's 12,000. Let's just say 12,400. So to find out how much we could have made here, because a distance of this space between your entry and stop loss gives you $20. It means the same distance, your direction, it will give you what? $20. So for us to find how much we could have made, what we do is we have to divide that amount by 12,400, right? 12,400 divided by 12,400, which is the distance between your entry and the stop loss. We will get 6.3. So this 6.3, since every movement of that spacing of the 12,000 is $20, it's 6 times what? 6 times 20. 6 times 20 gives us what? This is $127. So automatically you could have made how much? $127 using what? Using only $20 on this trade. You could have risked actually only $20 on this trade, and you could have made 100 and what? 127 US dollars. So now let's go back to another day where there was a pattern. I want you to know how to identify these patterns. M and W was, we're dealing with the 1 hour first. Then I'll also do 30-minute time frame for you. So we go back, and this was a successful trade on the what? On the 5th of September, right? We had price, it was coming down, forming what's this? Lower highs, right? And lower lows. Lower highs and lower highs are like pullbacks, right? The price is trending down from the, what's this? It's trending down from what? From the resistance zone, right? And it's forming what? Uh, lower highs and lower lows, right? Lower highs, lower lows, lower highs. Now you see the lower highs, how many candles are they? These are just like indecision candles here, because they have a week up and down, up and down. They are indecision. They are saying they don't know whether the market will move up or down. So you can see how many are there. They are just two. I told you we need a momentum move, maybe of 4 hours in one direction, and we need it to come back and retest before we can take the trade, right? So these are just pullbacks. We are still going down. Then we had this move. So what are you learning from the pattern of price? This move, what did this move do? This move, it destroyed this trend. It destroyed this trend because this trend was moving down with lower highs and lower lows, right? But there was no momentum move to destroy what? This trend. So when this move happened, how many hours? 1, 2, 3, 4, 5, 6 hours going up, right? It did what? It destroyed the power of the downtrend. Because why? These are bigger candles, and what? It's a bigger movement. So automatically it has destroyed what? The power of what? This downtrend. So the reason why I'm always saying you have to wait for a bigger move to destroy the trend which is happening at that time. So if it's an uptrend, you have to wait for a downtrend, a bigger downtrend, about 4 hours or 5 hours, even 6 hours of movement down, or 6 hours or over 4 hours of movement up. Understand? Hours of movement up. So now so now what is happening is we saw this move moving up, right? We don't trade. Understand? Don't see the 10 and you want to jump in saying I've missed it. No, you get blown out by the market makers. I always wait for the pattern. So the structure is broken, it goes up, and then you see it went back down. How many hours? 1, 2, 3, 4, trying to retest this area. And what happened? If really it wanted to continue the downtrend, it could have broken this area and continued, right? But what happened? It came back in and even went above the moving average, right? So it means you could have been doing what? You could have bought this market even though it did not go far. Why? Because it has formed what? A W. You could have bought this market. Those who are using stop loss, you could have put your stop loss on the previous low swing here, and then this could have ended you, right? And when could you have exited this market? Because when you're in profit, you have to put a break-even stop loss on your entry, right? So this market, as far as you are concerned, right, you could have waited for it what? For it to form another pattern for you to know that I'm going out. Because what could have happened here is that it started to go down, right? But this could have been a mere pullback and then a continuation, right? That's why the proper place to exit could have been here after seeing that, okay, it has formed an M, so I must be preparing to sell this market. So you could have closed your W and closed your profit because it did not move much, right? So we go to the previous day, which was the 3rd of September. right? The 3rd of September, what are we seeing? We are seeing price, it came extreme. All the indicators were extreme, and then it went down for about 1, 2, 3, 4 hours, which is a big move. It broke this structure of the uptrend. Good. We are not in the market. We are waiting for it to go back to retest. Always wait for the market to retest before you enter, people. Always wait. That's when you're going to get quality trades. So when it went back to retest, that's when it formed the verified resistance. After it shifted, you see it's written verified resistance. This verified resistance wasn't here. It wasn't written when price was rejecting the first time. It was only verified when it went to retest. You see, that's when it was verified. So these are very powerful trades whereby the verification of a resistance happens after maybe just during the same day. Like let's say it moves down, like you see, for 1, 2, 3, 4 hours, and then goes back up the same day for another 1, 2, 3, 4 hours, and then it shifts the zone. This thing is gonna write verified resistance. So such kind of trades that happen like that are like very, very high quality, more than 95% accurate. So where are you gonna trade this? This is an M, guys. This is a qualified M. So you are gonna enter it here below the moving average. And for those who are using the stop loss, you put it above the previous swing. All right. So even if you are risking $20 on this trade for 2 days, 2 days, and you come out on this W here, you could have still earned about $140 or whatever, $150 on this trade, right? So I'm showing you quality. Right? Let's go back. Let's go back. These patterns you see, they are happening. We have the price, it came straight, rock bottom, right? It decided to go up, right? It decided to go up. You don't do anything. Then it decided to come back and try to retest this area. What are we getting here? We're getting a W, right? And then it closed above the moving average, the 13-period moving average. So what do we do here? We buy. We buy, and then we put what? We put the stop loss where? Below the previous low, swing low. So we buy here. The stop loss for $20 is where? Here. So once that happens, what happens? This price moved for a long time. It was moving, pull back, moving, pull back. There was no break of structure. The only time there was a break of structure is here, when price moved with bigger candles. You see, along the way, you could have been holding this for 1, 2, 3, 4, 4 days. You could have been in this trade, and this trade with a risk of $20 here, it could have earned you a profit of, let me just calculate for you when I show you, because when the structure is broken, always know that the price will retest, right? Always know that the price will retest, because the price has to retest. The price doesn't want to be obviously known that, okay, I'm going down. So when this breaks the structure of the uptrend which was happening, right, with bigger momentum and bigger candles, always know that it has to what? Pull back. Never enter a trade because you see big candles and see, no, the momentum is down, I'm gonna sell it. You are selling it after you have missed a lot of information, because this is 1 to 3 hours. Then you want to sell it. The moment you sell it, it will go against you, and then it will take you out, right? So always wait for price to go back and test, right? Sometimes it doesn't necessarily go beyond the highest point, but it goes near that area, right? And then it rejects, which shows the buyers, they don't have power. They have failed to break this area, so they are coming back in. So it's a sell. So from holding this trade for a buy, you could have been exiting the sell here, because it could have told you that, no, this structure is broken, there's a retest, and now we are going down for sure, right? So now what happens here? The distance between this point and that point is about 276,443. 276,443. 276,443. Right? 276,443. And then the distance between, that was your exit, right? The distance between your entry and your stop loss is what? Look at this. It's about 18,318. 18,318 divide by 18,318. What do we get? We get 15. This 15 per movement like this, your direction, you're earning $20. So it's 15 times $20. You could have made 301 US dollars in how many days? 1, 2, 3, in about 5 days, right, of holding this trade. Mind you, you could have had other trades running, right? But as I go back, like I just wanted to show you the pattern, there are actually many volatilities, right, that you can trade. Here's the pattern again. We had the market moving down. It came rock bottom, right? And then it changed with bigger candles, right? But then we waited. And then this candle, you see, it went to test. But it was showing that, no, I will not continue moving down. It rejected, and then the price went above the moving average. So you could have been buying the price here, right? Knowing that this is a what? This is a W. And you could have put your stop loss where? Here, for $20. And this trade, it ranged, but eventually it moved, right? It moved. That's the important thing. So you could have earned something on this trade. That's the pattern I'm trying to show you. What do we have here? We have price coming down, going up, coming down to retest, and it's rejected. And what happens? It moves up for some time. Although this one never really went far, but you could have been out of the trade. I'll show you how to exit the trades. But again, what happened here? It formed a W again. It went, came back to test this area and shifted the zone, and then it moved up. So these patterns are always happening. They're always happening. They're always happening. We see it here, right? It goes, comes back to retest, it pushes, it goes up, right? And it comes back after coming out of the trade, it comes back again to the same area. So this is a bigger W. You see what happens? Then it goes up. So price is always forming patterns. Here we have an M. It went to this level, came down, right? Went to that level, rejected, and what happened? It went down. These are short trades, right? So this pattern, as I'm telling you, it's busy happening on all the volatilities, especially on volatility 75. Let me go to volatility 75, right? Volatility 75. The previous trade that happened on volatility 75, look, it came in the resistance level of the belly system, and then it fell down. It went down. You are doing nothing by this time, people. You wait for it to come back. It goes back and it retested and took out some people, because some people who entered this trade, that's one thing you must know about this pattern. Some people wanted to sell this trade. They had their stop loss here on the previous swing high. So they are busy enjoying profit, thinking, no, this is the move. And when the market starts to go against them, people always have a tendency of not being disciplined, being emotional. That's how the market makers always make money from us, because you will not even put a break-even stop loss. You see price moved so much in your direction and it's coming back, and yes, you're not even putting a break-even stop loss. You're not even thinking that, no, this must come out of this trade. So it will come and take your stop loss and spike, take out everyone, and then it will come back and shift the zone. When it shifts the zone, it's moving, right? So the best thing to do is let it come down. Don't do anything. Never trade on a first 10 in the price. Never. You must stop that from today. Never trade the first 10 of price. Never. Wait for it to go back to form an M on W. That is the pattern the banks use. So when it went back and shifted the zone, you can enter the trade here. You can put your stop loss here. Previous swing high. Distance from here to here is $20, right? Now, if you count how many $20 are you going to make to down here? This is like 20, 40. You're going to make 100 and something US dollars. just on what? Just on this move, right? This was the M. This was an M, right? So if we go back, what do we see here? We see a W. You see price was moving down. It even crossed the center line. We thought it would go fully into what? The support. But mind you, I told you, you cannot measure the lowest or highest point of price. It can decide not to go down here. But what can help you trade effectively? I told you the price itself. You have to study the patterns. That's the most important thing. So price was going up, right? When it is moving up like this, you couldn't have been doing anything because you have to wait for it to come to retest this zone. This is the zone where price reversed from. So when price reverses and is moving up, wait for it to come back into this zone, right? It came back in the zone, it rejected and shifted the zone. You buy, right? You buy people. Once you buy, where is your stop loss? Your stop loss is here on the previous low point, just see, right? And then you buy, you make money. What is this? Guys, this is a W. Price goes up, breaks the downtrend structure, it goes up, comes back to retest and shifts. That's when you buy, right? Now, it's not all the time that price turns by using an M or W. Like here, look, price just came in and it turned, right? It spiked there, but it turned and it went, right? So one thing I want you to understand is this. Look, you don't know the future and you don't know where price is going. The best way is just trade the pattern that you know is very effective. So if price is here and then it falls like this, and then you start to cry saying, yo, I missed it, hey, I missed it, I could have sold it, I knew it was up here, it was in the previous resistance, I missed it, it rejected, it shifted from there, I could have taken a sell there. People, this thing could have gone for 1, 2, 3 hours down, and it could have come back to test this resistance and taken you out of the trade and shifted the zone, then it could have come down, right? So what is the safest way to trade? The safest way is not to guess. No, the safest way is only to take the pattern, people. The safest way is only to take the pattern. When you take the pattern, you're going to enjoy trading, right? That's 75 I'm just showing you. We can go back, right? There are many volatilities, so don't say no, but I'm missing moves. You're not missing anything, right? Because we are not only trading on the 1 hour chart, also on the 30-minute. I'll show you what I mean. Okay, let's look here first, right? Let's start just from here. Look at how powerful the pattern is. Price was coming down, it broke the structure, it moved up for 1, 2, 3, about 4 hours with big candles. We don't do anything, we wait for it to come back. It came back, right? The moment it shifts, we buy. And I'll show you how to enter. Your entries, you don't do them on the 1 hour. For you to have an early entry, we enter from the 5-minute and the 2-minute chart. You can customize MT5. I have a 2-minute chart. So what I do is when the price is going down like this, right? I mark it as it's going down to retest. I mark it because I know it has already gone up. Now it's going down. So I mark it preparing to say, no, I want to catch it when it's going up again. So what I do is that when I mark it, I shift to the 2-minute time frame, right? I shift to the 2-minute time frame. Let me see if I can shift and show you. This was the 30th of August. Let me shift to the 2-minute time frame. 30th of August, right? 29, 29. This is 29, 30, right? So where I marked, you can see the price was going down, right? So it went down to this level. Is the level we saw in the 1 hour. So as the price went down, right, you wait for the candle to close above what? Above the moving average. So this tries to go. This is a 2-minute chart, nothing, and this candle is the one which closed above. So this is where you what? This is where you buy. this is where you buy. And look at what happened on the 2-minute chart. The market moved up. So this is why you buy. If we shift to the 1 hour, right, 30, you'll be able to see. You see my buy is down here. You don't wait for a 1 hour white candle to form. You will be late, guys. You don't say I'm waiting for 1 hour. These candles, they move, right? That's what I'm saying. When it's going down to retest, you mark it and then you enter from the 2 minutes. You wait for the prices to go above the 13-period moving average on the 2-minute time frame, and then you'll be able to get a very, very perfect entry with a very, very low drawdown, right? And your stop loss will just be below here, below the retest here, right? Below the retest. So you look at this, you will make money, right? So what do we see here? We see it forming another pattern. This price came here, it broke the 50% Fibonacci level, right? And then it went down all of a sudden. The 50% is also a reversal point, just like the upper part and the lower part of the belly system. The 50% Fibonacci is also a place where prices react, right? So now price goes down. There's nothing, we don't have the pattern here. We are doing nothing, guys. But then price decided to go back up, right? Now, when it is going up, make sure you mark it, right? Make sure you mark it. This is the same 30. Let's go to the 2-minute chart, right? And check for you. Make sure you mark it. The 30th, right? What? The 30th. You see? There is the mark, right? So what do we wait for? I wait for the candle to break below the moving average. So this price, I'll be just following it. This one. So when the next one opens here, I'm selling. Look, the drawdown is very little. The price just goes, right? This is how you find out that my history of trading the binary option of volatility 75 is a history of where I could take a $35 and make $2,000 on one trade within 1.5 days. I'm talking about a balance of $35 and my equity will be at $2,000. 2 weeks back, I was trading another volatility. I just loaded $13 as a balance just to test my skill. I just took one trade, guys, using the same things I'm showing you. I just took one trade. After 7 hours, I was in a profit of $500. It even went up to $600 equity. But my balance was just $13. I'm going to be demonstrating some of these things to you live. But this is what I'm trying to tell you. Look, this was a good trade, right? You could have earned something because on the 1 hour it formed what? It formed an M. It formed an M. You can see this is an M. And after making money on this W and on this M, we get another W here. Price goes up and it fails to continue. It comes back to retest this point and then it shifts the zone. Look at this trade. Look at this trade, how much it could have earned you. This is a what? This is a W. So what I'm trying to tell you, never trade anything that is not an M or W, people. Never. Here, you can see, we had it here. It came down, went up, came back to retest, shifted the zone. You could have made money. From the 2-minute chart, you could have entered this trade early enough for you to capture this move, right? And you could have been out. I'll show you the exit on the next video. I'll show you, but it's the exit, it's up to you, but it's very easy. I'll show you from the 5-minute chart how to exit and what to do if you think that the price will still continue moving up. There's what we call hedging. You can hedge yourself. Hedging is, let's say you bought here and then the price on the maybe 5-minute is showing that it's a reversal. What you do, if you bought with let's say 0.03 lots, you will sell with 0.03. So when you sell and the price starts to go down, it will be like tug of war. The buy will be earning profit for you up to this point. So when you sell and the market starts to go down, the sell will start earning profit. So no matter how much this thing will go down, you will still maintain the profit that you earned from the buy up until the point whereby you sold the market. So you're going to have a buy trade and a sell trade, but your profits won't go anywhere. So if the market starts to move down, what do? You put a break-even stop loss on what? On the sell, because the sell, you're using it as a defensive mechanism. It's not for making money. No, it's just a defense trade, right? The major trade is the buy, because you feel like, no, this market is going to go up. There's space for it to go up. So what you do is that after you sell and it goes down, put a break-even stop loss on the sell, so that when the market comes back to that point, this one comes out at a draw game. It is closed at a break-even. And when the market passes, what will happen? Your initial trade, the buy, will be in more profit. So what do you do here? You just protected yourself temporarily, right? So now, even if you protect yourself temporarily, and then you see price coming back to retest, right? Agree you're keeping your profits. So when it comes back to retest here and shift the zone again, you enter from the 2-minute chart, you can add some trades, because this is a bigger W. Look, it's a bigger W. This is a bigger W. So guys, never trade anything which is not a W or M. Here, look, this is a what? This is a W. So these things work, guys. These things work. Let me go to the 30-minute time frame. This is today, 30 minutes. What are we seeing here? Guys, this is a W, right? The moment it was going back to retest here, I could have shifted to the 2-minute chart, right? And I could have waited, right? When price now broke here, what you can wait for, when price on the 2 minutes is turning, if it doesn't pull back before it crosses, let's say it just crosses immediately, always wait a bit, because the pullback will happen. So after this pullback, you would enter here for a buy. So this, you could have been in this trade, and your stop loss could have been previous low swing here. So you could have been in this trade, and by now, if you risked at $20, you could have earned, I think you could have earned close to $200 right now. Yeah, close to $200 right now. Because you see the entry is here, the risk is just close. This is the 1 hour chart. This is the 30-minute chart, mind you. I was doing this on the 2-minute chart for entry. So look at where this is. So there's potential for it to what? To move up. But you have entered. This is your trade. This is the W I'm talking about. Right? Let's go back. What do we see here? This is an M, people. This is a trade that could have made you money. Look here. Volatility 75. Very easy. It goes inside the zone, the belly resistance zone. It comes down. It goes back to retest. It shifts the zone. You sell. Guys, very easy. This is price. It doesn't depend. These are not indicators. This is price. Look here. It goes up in there, comes down, goes to retest. It shifts the zone. It goes down. Guys, you are missing these things every day. Look, it's coming from down here. It goes up. It comes down. It shifts the zone. It changes the direction. It comes down. You wait. It goes back up to retest. It shifts the zone. You sell. Guys, you sell. This is a what? This is an M. Let me go back, guys. Here, price goes down, it goes up, comes back to retest, right? It shifts the zone. What do? You buy. This is a W, guys. Let's go back. This one just turns smoothly, right? You don't take it, guys. It's not our trade. It's not our. I told you that don't anticipate if this thing turned like this. What makes you think it wouldn't have gone back to retest before it goes down? You see? So don't guess. If you try to guess, you will lose money, because you feel that, no, it's high. I saw it is high, so I just sold it. Then if you make money, you start boasting, saying, yeah, I caught it today. No, we don't want to trade with luck, guys. We want to trade with structure. If you are trading with luck, you will make money today, you will lose all of it tomorrow. You will make money for 2 days, everything will go. That's what happens, guys. So always trade the pattern. Always trade the pattern. Always trade the pattern. The pattern will always be there. We have it here. Look, price comes down, goes up, retest. What happens? It goes up. It's very easy, guys. You will get them. Look, this is an M. Comes down, goes to retest. What happens? It goes down. This is a big W, guys. You're seeing what I'm seeing here. Comes down, goes up, comes back to retest. This is a W. You see? This one, it just turns and goes down. It's not our trade, guys. Don't look at the chart and say, oh, I missed this sell. I missed this sell. What did you miss? What if it could have come down and gone back to retest? It could have taken you out. You cannot trade every trade in the market, guys. Be serious. We're only looking for W's and M's. Look, we have it here. This is a W. Working out. Look here, we have it. Right? We have it. The first one is here. Actually, it goes up, comes to retest, it shifts. We make some money. It comes back, try to retest this area. It fails. We make some money again. That's a W. Right? Here we go. It comes here, comes back down here, goes to retest, it fails, it shifts the zone, it goes down. This is an M, right? They are different. M's and W's, they are shaped different. We have price coming down here, trying to go up, coming down to retest, shift the zone. We have a W here. We have a W. X out. What do we have here? We have a W, right? So guys, only trade the M's and the W's. This one goes up and it just drops. It's not our trade. You don't have to cry over it, guys. It's not our trade. Here, price comes, indecision, goes up, it fails, it shifts the zone. We sell. This is an M. Even here, some M's, they don't go to the same level. If price came to this level and it went down, and price tried to go back to the level and it failed to reach the upper level, it means there's no strength for the buyers. There's actually no strength at all. So when it shifts with a significant candlesticks, we sell because this is an M. It's shaped like an M. That's what we want. This is a W, shape of a W. We buy. Nice W here. Price was trending down, lower high, down. It break the zone. It broke the downtrend with a big momentum, and then it went back with two big candles to retest. Once it shifts the zone, we buy because this is a what? This is a W. So guys, that's the secret. M's and W's. That's a secret for you to get the most accurate trades. Here, you see price was moving down, goes up, shift the zone, comes down to retest, rejects a W. You earn something. I can go as far to show you these things. Here, we have a W, right? You see price came down and it just shifted. This is not our trade, guys. This is just 10 so far. It's not our 10. It's not our trade. So we are not in. We wait. Okay, price goes down. It shifts. It goes back to retest. Once it shifts, we buy because this is a what? This is a W. So guys, I'm going to stop this video here. I'm going to upload it so that you can watch it. Today, I did not have time to make all the videos, but tomorrow I'm going to drop the video about the booms and the crashes, right? And I don't want you to be married to the booms and crashes, people. Don't be married to the booms and crashes, because the booms and crashes, there's nothing that can help you detect when the boom will come or the crash will come at 90% accuracy. There's nothing. That's why I rather trade volatility 75 and the volatility 125 and also other volatilities, because they respect the patterns, right? But I'm going to show you the same thing with the the ones the bulls, what do you call this? I don't trade them usually. The boom 1000. People don't be in love with with any currency or anything. Because if I tell you I trade in nuts, that some of you are still asking me, does it work on GBP USD? I'm like, yes, it works on all the currencies, but we have to pick the currencies that are very volatile, because volatility equals money, right? If you are trading something which is volatile, you will make money. You can trade volatility 75 only for a month using what I was showing you here. And I'm telling you, you're gonna greet me by hand. You're gonna say I was trading volatility 75. I wasn't in a rush. Every time I see what you were telling us here, I was entering and putting my stop loss at the right place. You were gonna show me screenshots of making $100 and something, $200 just with small amounts, right? By following these things. So let me load the boom 1000. Hey, these ones, they'll kill you. You must know how to trade them. So with the booms, usually what happens is same concepts. I haven't formed a strategy for the booms, but what I would do is same thing. You wait for price to come down, and you wait for it to go back to test, to boom. When it shifts the zone, you sell. You survive. Because booms, I don't like them, because even if I don't know if they'll obey this pattern or what, but let's check. Let us 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 check. We have it here. The price shifted. It went back to retest. Then it shifted the zone. You buy. But with the booms, if it's booming, these things, they form very fast. So you'll be buying quite like late, a bit late. But I think if you want to buy early, use the 2 minutes time frame for entry. But we are looking at the M's and W's. You have it here, it dropped. You wait, it goes to retest. The moment it starts to drop again, that's when you sell. That's when you sell it and you earn something. You will surely earn something. We have it here, it went, come back to test, it shifted. You would enter from the 2 minutes before this, and you might earn something from this boom, right? So I don't trade them so much. That's why you can see they're not even forming the pattern too much. They are not forming the pattern. And mostly when I'm trading the boom 1000, I like to sell it and avoid the booms. Because those booms, I hate them. You see here, it went down, came back to retest, it crossed, shifted the zone. You can sell, you could have sold there. Okay. We have it here again. You saw it came down, went, it boomed to retest the zone, it shifted the zone, and then what? It went down after crossing. It went down after crossing. Okay. Same thing, guys. We had it here, it came down, came to retest, shifted the zone, right? It still came down. That's an M. We had it here, it came down, went up, came to retest. You buy before this and it booms up. Same concept applies, guys. It's just that the booms and the crash, of course, they go into profit very fast, but you have to really know how to enter them, right? Because sometimes they can form a double M, which means it goes down, comes to retest. When it goes back down, you have to wait for the candle to close below the moving average. So to avoid this, so this is a double M. So when this one now opens below fully with most of its body, that's when you sell and you can survive. You can survive that. Just like here, you see it went there, it comes down and starts to range, it goes back to retest, right? The moment it's coming down, you wait for it to break below the moving average. Here, you qualify this as an M. So when it's below here, that's the safest point to sell it. You can make money, guys. just like here. It goes, comes back, tries to boom to test. When it breaks below the moving average, that's when you can sell. So if you use a 0.25 of them, they can even fit on $15 or $20. I've tried that. 5 of them, just a move from here to here, you'll be over $100, my friends. This one can even earn you a lot. So I'm showing you the same concept because I'm only interested in selling most of the time when it comes to these booms and what, right? We have it here. You can see it goes, comes down, goes to what, to retest. The candle breaks below the moving average, you sell, and then you hold it. You'll be able to make money, guys. Just like here, you see, it came down, but this one went to boom far beyond, right? It went to retest some area. We don't know which area, but it was coming down again. The moment this candle breaks below fully the moving average, you sell, you earn something, you'll be safe. You'll be safe, guys. Just like here, we have it going up, coming down, going up again to retest. This is an M. The candle breaks below here, you sell, you'll be safe, guys. Just like here, we have price coming down, going back to retest. The candle closes below, you sell, guys. You'll be safe. You'll be safe. You'll be safe. Same thing with the boom 500, guys. Same thing with the boom 500. Let me load it. Same thing, guys, with the boom 500. Same thing, same thing, same thing, same thing. Which one can I say? Same thing, guys. It goes up, comes down, goes to retest, closes below most of its body, you sell. You can survive, you'll be safe, guys. You'll be safe. Same thing here. It goes down. This one goes beyond. Remember the same pattern. It retests some area we don't know. It comes back down. The moment the candle closes below, you sell, guys. You'll be safe. You'll be safe. You'll be safe. You'll be safe like that. Same thing here. You see price was going up, guys, right? And then what happened? It came down and then it went up to retest and it closed below the moving average. This is an M, guys. This is an M. You sell, you'll be safe. You sell, you sell. You hold it until a candle breaks above, right? Look at the momentum. This candle breaks above. If the next one shows like it's going up, you can close this sell from here. But if there's no momentum, you just hold it, hold it, hold it. You see there's nothing opening above, which is momentum. Nothing, nothing. You'll be holding, holding, holding. And then here it breaks above and it starts to move up. You can come out. You see about 2 or 3 candles they are moving up. You can come out. So this is a very long move that can earn you a lot of money. That's how you hold a trade, guys. That's how you hold a trade. So which other one? This one goes beyond to retest. The moment this candle breaks below, you sell, guys. You sell, you sell. You can earn something. The only thing now I'm working on, I'm gonna teach you how to exit the booms using support and resistance. I'm gonna teach you in the next video. But this video is very important that I show you the pattern, guys. The pattern, the pattern, the pattern. Here we have price going, coming down, going up, breaking below, you sell. You can earn something still. So let me end this video here, guys, and then tomorrow I'm gonna do some videos early enough because I haven't even talked about the way forward and what we are supposed to be doing, right? So I'm gonna talk to you about I'm just gonna finish up with the binary tomorrow, and I'm gonna go to the robot. There's something I want to show you about the automated program that I want us to start. I want to show you something very powerful, and very soon we'll be starting, guys. I sent HD Markets another email so that they can give me my IB very fast, right? So be patient. Within this week I'll have my IB, and then I'll send it to all of you guys. Open your accounts under my IB, and then we'll be funding HD Markets with a minimum of $20, and I'll be turning on Algo Trade Soft for a month. and we are going to make money. Those who can fund with more money, it means at the end of the month it will be more money. So if you can fund with $50, it means more money. If you can fund with more than that, it's up to you. But the minimum is $20, guys. The minimum is $20. That's the minimum.